Choosing the wrong mortgage loan officer could cost you thousands, but with the right one, you can save big and stress less. Buying a home is one of the biggest financial decisions you're ever going to make, and having the right mortgage loan officer by your side can make or break your experience. Many buyers only focused on interest rates, but in this video, we're going to explore other crucial factors like communication, experience, and long-term financial strategy. I've seen what happens when buyers choose wisely. They close on time, they get the best financing options, and they feel confident throughout the process. So today, we're going to walk through the top things that I think you must consider when choosing your mortgage loan officer so you can make an informed decision and avoid costly mistakes.
I frequently am coaching or advising buyers in the beginning how important it is to have a good sense and a good relationship with your loan officer. I think, in my opinion, there are great loan officers, there are good loan officers, and as in every sort of profession, there are some not so great. So there's a list of things that I will usually go through with a buyer in terms of what to look for in your loan officer. But as a loan officer, I'm going to pose that question to you just to sort of share a little bit about what you do, but also highlighting really what the great qualities of an excellent lender.
Yeah, no, absolutely. I mean, I think the first thing always that's paramount is to listen to your clients, right? In any line of work, especially when it comes to finances, right? Because I always say that these lending programs are there to protect us, right? But, in certain instances, it also can be a pitfall, right? If you look at normal conventional loans, they allow you to use 50% of your gross income, right? We all know that we're not taking home, our full paycheck, right? And so I always tell my clients, the first thing I always ask them is, where is your comfort zone from a monthly payment perspective? Because I want to work within that confines. Now, everybody always goes into, well, listen, the house that I want doesn't actually equate to that price point, right? But it's about giving feedback, about giving recommendations, opinions on what is the best path for moving forward while also helping them achieve their goals, right? I think the characteristics of a good loan officer are, one, and Chris, you know this better than anybody, somebody that understands the guidelines, right? Somebody that actually understands what works, what doesn't work, and has a good understanding of different products, right? Whether it's a condo, a co-op, whatever it may be, there's thousands of pages of rules and regulations, essentially, that dictate how our clients can close. And that's something that I've always prided myself on, is really having a very strong understanding. But also being able to get with somebody and, understand what they're trying to accomplish, what their goals are, is of utmost importance. I want to build a relationship with my clients. And I always tell everybody, even after closing, if you have a question on anything, something on your mortgage statement, your mortgage payment went up, call me, right? I can assist you, not just during the purchase, but afterwards, in advice on investment properties, whatever it may be, how to structure, because sometimes people use the equity in their home to pay for, whether it be renovations, college, whatever it may be, right? We can really be a very valuable resource. And so, I'd like to think that I just try to get to know people on a personal level and apply that to a working relationship.
I think that one of the first things that you said, and I just want to re-highlight it again for anyone listening to this, is that what you're pre-approved for as far as a dollar amount and what you're comfortable with as far as a monthly payment aren't always the same number. So it's one of the things I know I run into. I'll meet a buyer that has a pre-approval for $900,000, but they didn't really get any great information from their lender about what the payment is going to look like on that. So it's one thing to get pre-approved. It's another thing to really be comfortable with what that payment equates to.
And I think one other thing that I realized that I didn't is a lot of people just focus on what are you qualified for, right? The other huge part about it is what you have to come to with the day of closing, like how much money you're going to be out of pocket the day of closing. And some loan officers, they don't even get into that discussion, right? Of, okay, this is what you're going to be parting ways with on the day of closing. Are you comfortable with that, right? Does that meet your expectations? Does the house that you're buying, does it need any repairs? Because, people are like, the conventional, everybody's like, oh, I have to put 20% down. Technically, if you're a first-time home buyer, the minimum's 3% down. And if you're not a first-time home buyer, it's 5% down. If you speak with pretty much any financial advisor, they'll tell you the best thing that you can do is put a little money down without burdening yourself on a monthly payment perspective. Because for a lot of people, once that equity is in your house, you got to get it out somehow, and it's going to require paperwork. It's going to require something, right? So going through those numbers and making sure they understand what each section of what we call the loan estimate is, right? That details out, okay, well, this is your origination, a title, and what do these numbers mean, right? A lot of people don't actually go through that document, and then they get this loan estimate and they're like, oh my God, $60,000.
Where did that come from?
Yeah, exactly. And so, that's important as well.
We have another video in this series that it talks about how much you need to actually buy a home. And I'm so glad that you brought this up, because down payment is always the number that's the most focal, especially with a new home buyer. But the closing costs on the back end in some cases can be equal to or greater than what that down payment is. And then there are other out-of-pocket costs, whether it's the appraisal or an attorney or a home inspection. And I'm glad that you brought it up, because I know that's something that you do a great job with. I know we really try to make sure our clients understand, but having that complete financial picture is, in my opinion, what gives a home buyer the greatest sense of confidence, that they are financially prepared for this transaction and don't have to worry about that other shoe dropping, to your point, a couple of days before closing when they get that closing statement for the first time.
Yeah, I'll never forget. This was before I was in the mortgage industry. I was involved in a transaction for a purchase, and my loan officer at the time, 3 days before closing, was like, hey, you have to pay off this $5,000 car. And it was like, well, but why didn't we know that before? Right? And yeah, exactly. And listen, the more due diligence you do up front with your clients, the better position everybody's going to be, because there's nothing worse than needing to make a difficult phone call, right? Like that. So, make sure as a home buyer, right, that you are well informed. Ask all the questions. Don't be embarrassed, right? This is your financial future, right? This is the biggest investment you're probably going to be making if you buy a bigger house or second home, whatever it is. So you should be asking all of the questions. Never feel uncomfortable, because at the end of the day, it's, you're the consumer, right? We need to be educating you.
I think there's a short list of things that when I talk to a friend or another business associate or just a partner, anybody that's been through the home buying process, the people that have had the most stressful experience, it's a combination of a few things. One, it's this sort of unknown financial situation. And then I think the other part of it is the unknown in just the home buying process. Because I think for so many people coming into it, the not knowing it is the biggest variable. So as we talked about, the difference between like a pre-approval amount and a monthly payment, down payment versus closing costs, all of that sort of total financial picture, but also just understanding the home buying process, that it's not just shopping for a home. It's not just writing an offer on a home, that there's a home inspection, there's an appraisal, there's all of these other things that happen. So part of why this video series I think is so important for anybody watching is that we're really trying to make sure that we're helping prepare people not only to have a good sense of confidence, but more importantly, to have a great experience in this home buying process, so that it isn't terrible and it's not a horror story that they're telling at, the next block party or family holiday.
Yeah. We all know that the best thing that somebody can say is, oh, that wasn't bad, right? It's like, that's like the best. It's like, thank you.
Or
That's the biggest compliment we get.
Thinking about that whole preparation, we sort of went down that road of the financial piece of it in terms of closing costs and down payment. Are there still programs out there that can help a buyer, especially with down payment or closing costs? And if there are, can you just share a little bit with us about what those are?
Yeah, no, absolutely. So the state of New Jersey actually has a great program, NJHMSA, which can provide up to $22,000 towards down payment and closing costs, right? Now, there are restrictions of this,
Money.
right? So, yeah. So, for instance, in Bergen County, right, the maximum that you can get is $15,000, but there's actually an additional grant called the first generation buyer, which we actually, I think that there was a transaction that you were involved with that, where we were able to get the client the additional $7,000 as being a first generation home buyer.
Yeah.
That's a very rewarding, transaction, right? Some people actually find it a burden. They're like, oh, I have to do this program. But, when you're allowing somebody to accomplish that, it's very rewarding from my perspective, right? So, there are restrictions to that. There's income restrictions. There's asset restrictions. There's debt to income ratio, which is, how much your monthly obligations are versus how much you make. There's restrictions with that. But they're really great programs that are made available to people. The other program that we have is it's called Home Ready First. That's a great program. They actually just, talking a little bit about some changes in programs. So as of January 31st of this year, this Home Ready First program used to give $5,000 in lender grant and 1% of the loan amount grant up to $8,000 towards buyer. And there was no income limit. There was no asset restrictions. You could have $1 million in the bank, make $1 million a year. If you live currently in an eligible area and you didn't own a home and nobody owned a home prior to closing, the bank would give you $8,000, no restrictions, right? But as of January 31st, they're now actually applying the average median income restriction for those. So now you don't qualify for that if you make over 80% of the average median income, which in Bergen County, it's like $96,000, right?
And again, a good loan officer is going to take the time to look at all of that because that's just of that initial pre-approval call.
Yeah, no, absolutely. And one thing about NJHMFA that I did want to highlight is that, one of the biggest issues with it is the time horizon, right? You can't refinance the property. You can't sell it. You can't move out of it for 5 years, right? So you're essentially, you're obligated to stay in that. And if you don't, you have to essentially repay the government for the money that they gave, right? So that's something very important to know. There's also some really great, what we call community lending programs, CRAs. For instance, if you're in an eligible area, if the home that you're buying is in an eligible area, and your income meets the income restrictions, there's no PMI, there's down payment assistance. So really great programs that are out there. I know that Union City, parts of North Bergen, those areas, granted the home prices, just like with everything else, have increased there as well. So it's sometimes a challenge to get clients that can afford to live there that also qualify for that loan. But we leave no stone unturned, right? I will always do my best to put my client, offer them all of the options that are available, give them my recommendation, and then, obviously let them choose what they feel is best for them.
Thanks for watching. We want to make sure that you're fully prepared for the 2025 real estate market. So message us directly. Request a free home loan toolkit packed with expert tips and must-ask questions. Plus, check out our other videos for more insights or schedule a complimentary consultation with any of our agents today. A strategy session is the best way to find out what your options are and talk about your unique situation. Don't leave your mortgage to chance. Take the right steps today, and we look forward to talking to you.